Do you want a way to protect yourself and your money? Keep listening to find out how. Hello, and welcome to the Wealth Minded MD podcast with your money best friends. I'm Dr. Lisha Taylor.
And I'm Dr. Brittne Halford.
And of course, we're here to help you build wealth and make good money decisions so you can create the life you desire with more control over your time.
Hey, Lisha, one of the most important financial tasks we do as doctors is protect ourselves, which means getting the right insurance. I recall purchasing my insurance policy just a few days before I graduated from residency. What was your experience?
So I got my insurance when I graduated from medical school right before I started residency. I actually called a few agents, but I had the best service from Pradeep Audho at PKA Insurance Group. He was super responsive and personable. Unlike some of the other agents, Pradeep actually got me quotes from all the major companies and actually took the time to explain the nuances in each of their policies. What I love most is that he wasn't just this way for me. Whenever I would send one of my friends to him, he would not only speak to them, but he'd also let them know where to go or who to contact if there were better options or discounts available.
At PKA Insurance Group, Pradeep Audho and Matthew Peterson are independent brokers focusing on disability and life insurance. They excel in securing coverage for physicians and other medical professionals. Discounts on disability insurance can range from 10 to 40% depending on your situation. And there is now an A+ rated carrier offering up to $10 million of life insurance without lapse. If you are very healthy with limited to no medical issues, approval is likely in 5 minutes. Reach out to PKA Insurance to discuss your disability or life insurance needs at www.pkainsurance.com or call 1-800-258-1018.
Hey, money best friend, we want to hear from you.
That's right. We need to know a little about you to improve this podcast and ensure we give you the best content possible.
Are you a wealth-minded doctor like us navigating the challenges of money and medicine, or are you in a totally different field?
Are you in your early 30s like me or a bit older like Brittne?
Hey, I'm not that old. If you wouldn't mind, head over to the podcast show notes, click the link for the survey, and kindly fill out this super short 6-question survey.
Based on your answers, we will tailor the podcast to fit your needs. Thanks in advance for filling it out, and don't forget to leave a review.
We appreciate you.
All right, Brittne, what's going on in your world? How is your life over there in Boston?
Oh my gosh, Lisha, we're still in the phase of transition. It's a lot when you have to move and reorganize your life. And so time is of the essence for me, and I'm feeling a lot of time pressure and overwhelm. And because I feel overwhelmed, I kind of just want to eat ice cream and watch the new series of Bridgerton. That's what's going on over here.
Oh my gosh. Well, you know what? Your love for ice cream needs to be studied. But anyway, so Bridgerton, you haven't watched Bridgerton season 3 yet? How are you this late on it? I don't understand.
I had 2 kids and a husband, and I was on service for 12 days straight. So, your girl is a little tired.
Okay. You're forgiven. Let me see. So in my world, if I'm being very transparent, I'm like a tad sick. I've been doing like a lot of traveling, and I think just like put too much on my plate. Like I schedule too many things. As we're recording this, 4th of July passed, and, I had volunteered at like the Peachtree Road Race, which is like one of the biggest 10Ks in the country. I know the organization that puts on that race, and so I was helping out, had to be there by 5 a.m., and it was like in the sun there for, a long time. And then I left that, went home, showered, and then like caught a flight to Miami to meet up with my girlfriends for 4th of July weekend. And then when I was coming back from Miami, my flight was delayed like over 12 hours. Like it was insane how inconvenient it was. I kept being put on standby. And so I kept getting this hope of like, maybe the next flight's for me. And they would be like, nope, it's full. And so that was just like so disappointing and disheartening the entire time. And then I woke up the next day with like a little scratch in my throat. And I was like, gotta be kidding me. Like, really? So I'm just like gonna take this as like God's way of telling me, Lisha, you need to rest. You need to like not go on a trip every weekend, and you need to like drink more water and like drink less wine. So I'm just taking the cues that I am being giving right now.
Oh my goodness. Well, I hope you feel better. I think rest is restorative and it definitely productive. And for me, I also need to start to think about reframing the concept of rest for me. So Lisha is saying this, people, as she is about to get on a plane on Thursday to go on yet another trip.
This is the problem. Like when I make a commitment, I am like very committed, as you would say. And then so this was already planned. This is a conference. If it was a trip for leisure, I would cancel it. But because this is a conference that my job is paying for and all of that, I'm going to honor my commitment and go. I mean, I'm a travel person. I love to travel, but I need to like start planning like rest and say like, okay, maybe I shouldn't travel every weekend. So yeah, seems self-explanatory for a lot of people who are listening to this, but apparently this is a lesson that I needed to learn.
All right. Well, as we're talking about lessons learned, do you have any money mishaps or confessions for us?
I do. And it's kind of like a dilemma that I'm having. Brittne, I spend a lot on food. For those who've never met me or seen me, I am not the largest person for sure. So I have a very high metabolism. Thank you, Jesus, and mom and genetics and all of the factors that play there. But I get a very fast metabolism, but I do eat a lot. And I realize I spend a lot of money on food. Like when I'm looking at my credit card statements, I'm like, dang, I bought that much. I spent that much. And so I'm trying to like do a better job of just not spending $500 and $600, if not more, each month on food. And I think a part of that is because like I do some Blue Apron, like that meal delivery, service thing, like a couple of weeks out of the month. And then like I buy groceries. And then I'm a snacker, so I buy snacks. And then I'm a wine drinker, so I buy wine. And then I go out to eat with girlfriends because I'm always invited to brunch. And like I travel a lot. And when you're traveling, you tend to eat out a lot more. And so I'm trying to like figure out a way to like rein in all of the money I'm spending on food. And this is really coming to a head because I'm trying to figure out what to do for lunches. Groceries have gotten more expensive lately. And a lot of like the meal delivery services charge like $10 or $11, if not more, per meal. And maybe I'm just cheap, but I remember a time when you could pay like $5 and like get a decent meal. And like now that just seems not to be the case. And I'm trying to figure out, is it cheaper for me to like bring my own food or to like buy food at my place of employment? Because actually where I work, like the School of Medicine, they have like this discounted cafe where like all the food is like made right when you order. And like everything's discounted. Like you can get wraps for like $4 and you can get burgers for like $5 and like chicken sandwiches and pastas and all of this stuff. And it's like $4 or $5 each. And I'm thinking to myself, I think that's cheaper than me buying things at other places or like packing I don't know. I'm trying to figure out a way to like spend less money on food, make lunch time more economical. What do you do? Or do you just like not eat?
There are some days when I'm like, did I eat? How much did I eat? But mostly for me, I take my lunch. Usually it is leftovers. I am not a person who spends a lot of money on food. I give myself an allowance just because some days I don't want to eat what I brought. So I give myself $25 for the week. And sometimes that might mean a coffee or a nice meal. Sometimes it might mean a bunch of snacks that I probably don't need to eat. But I think a lot of people have this burden. It's either that you're going to spend the time to prep the food or you're going to spend the money to pay for it. But I personally feel that the time is saved by me prepping and money is saved because when I know exactly what I'm going to eat, because I've prepped the food and I brought it with me, I don't have to spend the time ordering, walking to the place or getting the food. I guess if you get it delivered and you can do that pretty quickly, but usually for me, I'm like more frugal. So I just don't want to pay for the delivery fee. So that means I have to, leave work and walk to the place or go to the cafeteria. If you go to the cafeteria, there might be a line or you got to wait for the food person to come. So it's just easier for me to bring my lunch. And yeah, I usually just bring leftovers or a peanut butter and jelly sandwich. Like I'm not a food snob. I just need nutrients.
Yeah, that's a good idea. I will say though, this is where I think you being married, Brittne, and me not being married comes into play. Because oftentimes when I'm cooking for myself from scratch, it's hard to just make one meal or two meals. And so oftentimes I have enough food for like 5 days, but I don't want to eat the same thing 5 days in a row.
Mhm.
And so then I'm like wasting money because I'm like cooking and I'm not eating all of the food that I made. And it's harder to buy things in smaller portions. For example, I tried to buy like wheat bread because I was like going to make sandwiches. And like there's no way I can finish the entire loaf of bread before it goes bad. Versus like if I were in a partnership and we were both eating sandwiches, then we would finish the whole loaf before it went bad. So then I feel like I'm wasting money. Same thing with like a gallon of milk or something like that. It's been challenging doing that. And I think that's one of the reasons why I got Blue Apron, because I don't actually mind cooking. I just don't want to eat the same thing 5 days in a row. And so then I get Blue Apron and I get enough. So like each time I cook, there's like one extra meal. But then it's like I'm cooking every other day now. And sometimes I'm busy when I come home from work and I don't want to cook. But then if I do cook and I'm cooking from scratch, like not using Blue Apron, then I have all these leftovers that I'm not going to eat. Single people problems. You said that you meal prep. Do you eat the same thing like 4 days in a row? Do you like cook all the time? Do you hire somebody that does the cooking? Like, how do you do this?
So it depends on how much help I have. I do have someone who helps us in the home, and sometimes she prepares meals, and I freeze a ton of stuff. So I would encourage you to use your freezer strategically. For example, if I'm making a big lasagna, because a lot of times my husband doesn't actually eat at home. He prefers to eat out. So he spends a lot of money on eating out, and it would bother me so much when we first started dating and early on in our marriage, and now I'm not even bothered by it. So it's me and the kids, and I know about how much we will eat. And so if I'm making a big lasagna, I know how to freeze the lasagna now and warm it up so that it tastes fresh. For bread, the same. I put bread in the freezer, so I would encourage you just to invest in some like really good Ziploc bags and then put the half of the loaf in the freezer, and then, call me when you're about to warm it up, because you got to defrost it in a certain way so that the bread isn't hard. But I mastered the skill of storing food and using it later. So I think if you are strategic and thoughtful about how you can kind of repurpose and recreate meals out of things that you have on hand, if you have baked chicken, for example, cutting that up and making a chicken salad, a chicken Caesar salad, a chicken salad with grapes, so there are a lot of ways in which I just kind of repurpose things into new, fresh ideas so it doesn't feel like the same.
So that's really great tip. And also, as we're having this conversation, I am realizing that you are a much better cook than I am. So we need to have these conversations about how I can, use this to my advantage. And I'm sure people, maybe I'm the only one who doesn't know, how should someone, this has nothing to do with money, by the way, but how should someone defrost bread so that it's not hard?
So it depends on how quickly you need it, right? If you need it like, oh crap, I have nothing to eat and I want to make a sandwich today. Usually what I do is I put it in a Tupperware and I put the lid on. So you have some of that moisture that has been locked into the bread when you put it in the freezer that stays in the bread. And then I put it on defrost setting on my microwave. Because otherwise, if you just like put it in the microwave on defrost, then a lot of that moisture is going to evaporate and the bread is going to be hard. If you're going to do it in maybe a toaster oven, then usually I wrap it in foil to kind of still in some of that moisture. And if it's type of bread that maybe have been dried out a little bit, I just put a little water on it and then wrap it in foil and put it in the toaster oven to warm up that way.
Wow. Okay, Brittne's cooking tips. New segment. Thank you, Brittne, for that. As you can tell, Lisha needed help making a sandwich, and Brittne knows how to do all of this stuff. I have so much to learn.
As physicians, one of the most important things that we can do is make sure that we secure our income, because a lot of our financial plans are contingent on our high doctor income. One of the things that you will need to do is make sure that you get long-term disability insurance.
Now, Pradeep and his team at PKA Insurance Group have a reputation for putting people over profits and always doing what's best. Do not hesitate to email PKA Insurance and his team today.
They will help you get the insurance you need with the service you deserve.
So let's delve into our next segment. I think this episode is really special because we're doing something a little bit different. We wanted to start a mini series, if you will, on various financial topics. And one of the first series that we're going to start is our Protect Yourself series. So this is going to mean that for the next few episodes, we are going to really delve into different ways that doctors can protect themselves and their money. And there's different ways to do this, different strategies that we have for this. But we thought this would be a really cool series to kind of kick off as the new fiscal year is starting. People are starting new jobs. We want to make sure that you and your money are protected. And one of the ways to protect yourself is by making sure that you have the right insurance. And I'm sure you've been talked to death about different kinds of insurances. Maybe that's a boring topic for you, not something you're particularly interested in. But I do think it's helpful here. And we're going to try to do this in a fun and engaging way. All right. And now for our Wealthy Insights segment, we have An esteemed guest with us today, my friend and someone I've known for quite some time. His name is Pradeep Audho. And if his name sounds familiar, that is because you may have heard him doing some of the sponsorship ads and partnership ads for our show. He wanted to support our show. And of course, we always are happy to support his business as well. Pradeep and I met a few years ago when I was a lowly medical student and I was graduating. And I'm one of those money nerds who was just like, I know I need disability insurance. I know, right? Probably not the first thing that comes to most people's minds when they graduate from medical school, but I'm weird and you guys know that already. Anyway, I was looking to get disability insurance and I contacted quite a few different companies. And one of the companies that I contacted was Pradeep Audho at PKA Insurance Group. And I found him very responsive and knowledgeable. And so we worked together. He helped me get my own disability insurance policy, and we've been working together since that time. But I wanted to bring him on today because I think he could provide some invaluable insight about the disability insurance process and disability insurance in general. And hopefully we'll do this in like a fun, engaging way so that everyone gets something out of it. And Brittne, I'll let you kind of start things off.
Well, Pradeep, I want to say it's nice to put a face to the name. I've said your name multiple times during the ad, and it's a pleasure to have you here. I know that you're an independent insurance agent, and Lisha has built this rapport with you, but please let me and the audience know a little bit about yourself, your background, and how you got started in this space.
I grew up in Guyana in South America, and I moved here when I was 17. This was a long time ago in 1988. So we sold our house there. I was 17 at the time. And when we converted the money to US dollars, it was $1,350. So it was me, my mom, my dad, and two sisters. And I was the eldest. Anyway, so we came because my uncle, he sponsored us through the immigration. I came in 88. We've settled in Massachusetts. And then I went to Northeastern University. I have an IT degree. I was a software engineer for a while. And then when I hit 30, that's when I started thinking, okay, this is not it. I just didn't like my job. I was just going through the motions. The money was great, but it just wasn't something I was interested in. I always had an interest in finance. So fast forward, over those years, I always had an interest in finance. I had this noble idea that I wanted to be a fee-only planner.
Hey, listeners. So we just want to take a break in Pradeep's story because, Lisha, one thing that he's saying is fee only planners. And I think that this is really important for us to talk about.
Yeah, I agree with you because oftentimes when people are seeking out a financial advisor, sometimes they will encounter people who say, oh, I don't charge for advice. My advice is completely free. I think that's really important to highlight because nobody is doing anything for free. There's always a price on the back end. And oftentimes when people are giving quote unquote free advice, what they are not telling you is that they charge an assets under management model, which means they take a percentage of all of your profits, depending on how much money they are managing. That may seem small when you're starting out, but over time, that could grow to a large amount. We're talking multiple six figures.
Yeah. So really, we just want to encourage you all to pay attention to the fees. All right. Now back to Pradeep's story.
I didn't want to sell anything. And so back in those days, there was a lady who used to write an article for the Boston Herald, which is no longer, I think they're now bankrupt. The Herald, not the lady. She used to publish her AOL address at the bottom of her articles. And so I emailed her and I said, how does one become a fee-only financial planner? And she said, well, unless you know a lot of filthy rich people, you can't because you need to have assets that you're managing. She advised me, she said, your options would be go be a stockbroker. This was before E-Trade and all of these technology platforms like Robinhood, etc. So she said, go be a stockbroker or work for an insurance company. So when I hit 30, I quit my engineering job and I had money stashed away because I was making good money at that time. And so my thought process was, I'm going to try this for a year. And if it fails, I could always go back to my engineering gig. When I quit my job at age 30, I was making about 85 a year. This was in 2001. So that was good money back then. My first year selling insurance, I made $15,000. So it was not the best decision, but I knew there was a long-term benefit and I needed to stick it out. But I think also coming from a family of Indian descent, quitting an engineering job and selling things is not, your parents are not looking at that too kindly. And so that was a little bit of a risk. Mom thought I was crazy. I think our initial reaction, it was more of what are we going to tell your cousins? It was all about the family and how are they going to react? You have an engineering degree and you're selling stuff, and that to insurance. That was a little bit of pressure, but I had an idea of what I wanted to do. I started with MetLife. And in the fifth year, you have to make that decision. Do you want to stay as an agent representing one company, or do you want to be independent and represent all the other companies? I always knew I wanted to be independent because I felt like if I'm only offering one option, it's not good for my clients. So I made that decision after the fifth year. Okay, it's time to be independent. So I left and I started my own shop in 2007. So yeah, that's been the journey. So yeah, it was initially stressful, but it all worked out in the end.
That sounds fantastic. I didn't know some of those details, but I want to commend you and really point out a couple of things in your story that I think would really resonate with our audience. And I think one of those things is that, first of all, you set out to become a fee only financial advisor or a fee only certified financial planner. And I think that's one of the ways that makes you different is that you already knew, like, hey, I could become rich by becoming a financial advisor that charges an assets under management fee. And you purposefully did not go that route, even though it was the more lucrative one. And I think that says something about your character and it says something about, who you are as a person. And the other thing is like, you had the opportunity to continue to work with MetLife and represent that company. And instead, you made a conscientious decision to become an independent insurance broker so that you could offer quotes and things from many different companies. And I really do think that that is important because I don't know if a lot of doctors really understand the difference because we see that all of the time in the financial industry where there's financial advisors that only work with one specific company, or there's insurance agents that only work with one specific company. And when you only work with one company, you can only offer quotes and services from that company. And those quotes and those services may not be all that's best for the client. Maybe the client may actually be better served by going to a different company or getting different quotes. And so I wonder if you can expand on that a little bit. Like, what are some of the value from an insurance perspective of someone going to an independent insurance agent? And then, like, how can people know that they are buying insurance from somebody that they can actually trust who's going to show them all of their available options?
So let's talk about just the medical market. So physicians, dentists, etc. There are only about 5 companies that offer what's called true own occupation disability. So it's Guardian, Mass Mutual, Principal, Ameritas, and Standard. Northwestern, they hadn't been offering ONOC, but they had something called medical ONOC. But if you read the actual language, it wasn't truly ONOC.
Hey, Lisha, I just want to clarify what Pradeep is talking about here because he mentions own OC and in medicine all the time. We're using abbreviations. I'm like, what does that actually mean? Here, Pradeep is actually defining the definition of disability as own occupation. Yeah, exactly. So just to clarify that, that means that if you cannot do your job as a spine specialist orthopedic surgeon, you will still get paid, even if you could technically do telemedicine as an orthopedic surgeon. And so this means your policy will pay out if you cannot do the specific duties of your job or your specific own occupation. So the gold is in the fine details. So make sure whenever you're seeking disability insurance, you really understand that definition of disability.
Typical broker who's independent will show you at least 3 to 4 companies. I typically show 4 or 5 because the price could vary depending on discounts and stuff, and we can talk about that later. So yeah, if you're talking disability, you want to have at least 4 quotes in front of you when you're deciding what makes the most sense. So what we typically do, you probably remember this, but explain each policy. And then most of the time comes down to pricing because frankly, something no one really wants to buy, but you need to. And it's one of those products that if you don't have it and you need it, then you're screwed. On the flip side, if you have it, you hope you don't need to use it. So I think it's kind of important. And you don't have to shop around it. That's the other thing. If you're working with an independent person, they should be able to provide you at least 4 quotes, especially in the physician market with ONOC. You're not going to go wrong because there's only 4 or 5 companies that offer ONOC.
Okay, yeah. And, just to clarify, I think a couple of things like you mentioned, it seems like one of the benefits of going to an independent insurance agent is that that agent can then give you quotes from different companies. Because the way that works, from my understanding, Pradeep, correct me if I'm wrong, is that when you're trying to get disability insurance, ideally you go to a person, you go to an independent insurance agent, and then they learn a little bit about you and your needs. You then will get them quotes from these 5 major companies.
versus when you're working with somebody who is not an independent insurance agent, they may only be getting you a quote from the company that they work for or only a couple of quotes. And so I think one of the main benefits of going to an independent insurance agent is that you get more options. So I just wanted to clarify that. And Brittne, I know you had a question that you wanted to ask.
Yeah. So, Pradeep, one of the things that you mentioned is that, we spend all this money to pay for disability insurance and we hope that we don't use it, which is something that Lisha and I talked about earlier today, right? But I think although we understand logically, like physicians, healthcare providers, we're very smart, but there's something in our gut, in our brain, like, is this worth it? Because I'm spending all this money, I'm paying so much, and I don't see the benefit. Can you share with us some of your personal experiences of maybe some clients who actually had to use and take out disability insurance? What was the average cost that they paid in? What was the benefit? Can you provide some real life experience for us?
So women pay, and you know this, women pay about 35% more for disability than men do. There still are some unisex options available, but in most cases, that's pretty much gone. The state of Montana still has that. Massachusetts has a law that says women have to pay the same price as men. However, every single insurance company as of May of last year figured out a loophole and they walk right through it. So they're not doing unisex in Massachusetts. In terms of examples, so typically it's about, I would say, to get a good policy, you're probably going to be spending about 2 to 3% of your income to protect about 60% of your income. Now, that may or may not be your situation because a lot of what you would get on a private policy is dependent on what do you have at your employer. So for example, as an ending resident or fellow that's going into attending, you could get $7,500 irrespective of what you're making elsewhere or what you have elsewhere. But if you want more than that, we would have to ask, what do you have at your hospital or your employer? And that's going to directly affect how much more you could add.
Wait, Pradeep is talking about unisex versus women. Like, I don't even understand what the difference is. I know there's a unisex bathroom, but Lisha, shine some light, some knowledge, wisdom on what's going on here.
Yeah, yeah. Unisex just basically means the policy is going to cost the same no matter if you are a female or a male. And so when he's talking about a unisex policy, it's basically going to help all the females out. That means you're going to get the rate that the men get.
Ah, I see. Actually, I recall as a resident, when I got my policy, I went with Principal Insurance Company for that same reason. So, okay, that makes more sense.
Yeah, yeah, yeah. I went with Mass Mutual because they were offering a unisex policy at that time too. And as y'all can see, Brittany and I did different companies, right? And so that's one of the reasons why it's really important to get quotes from different companies. Different companies may have different discounts at different times. And one of the things, as you can see now, that you want to look into is getting a unisex policy so that it will charge you the same no matter your gender.
Now, I also love, Lisha, that Pradeep is kind of giving us some numbers here. He throws around a lot of information during this episode. And one of the things that he talks about is the amount of disability benefit that you can get. And he's mentioning this number of 7,500 is like the maximum amount that you can get. And they want to clarify whether you have an employer sponsored plan versus, some other type of disability benefit. What is your understanding of all of this? Do you actually have a plan with your employer as well?
Yeah, yeah. So what he's talking about is like insurance companies want to make sure that they are not paying you more to be disabled than your job is paying you to work. And so for the current guidelines, you can only get enough disability insurance to cover up to 60% of your income. And so when you're an attending physician and you're trying to get disability insurance, the agent's going to ask you, okay, how much insurance do you already have available to you at your job? Because most of us as physicians, we already get some amount at our job. Now, usually the amount we get at our job, there's a cap or a limit to how much we can get. And so when you go to an insurance agent, they're going to ask you, what's the monthly benefit that you would get from your job if you were disabled? And then they'll see how much more you're eligible to get. If you're a resident, there's a limit on how much you can get. And that's where that 75 number comes in, where as a resident, you can't get a benefit more than $7,500 per month, right? Because most residents aren't making that much money. So again, they want to make sure they're not paying you more to be disabled than your job's paying you to work. And so there's some limits in place. And in order to know what your limit is, they have to know what your salary is and how much you make. And of course, how much insurance you already have access to.
And you all will hear that I actually pro Pradeep a little bit more because I am actively going through this process of updating our disability insurance benefits. So keep listening.
So there is no right answer in terms of how much. It varies by person, but I would say 2 to 3% to protect about 60% of your salary. In terms of like actual examples, a lot of times people think, oh, I need to be in a car accident to collect. It's not the case. Every insurance company has a list of over the past year or 5 years or whatever, what sort of illnesses or conditions have caused people to file a claim. Off the top of my head, I'm remembering one of them was mental. I think it was Principal. I forgot which company, but their statistics showed that 17% of their claims 1 year were mental related. So you might be physically fine, but the mental issue could be a problem. So it varies. It's all types, and it could be on the job, off the job. You could be on vacation and you get disabled. That's covered on these individual policies as well. In terms of actual examples, I have a dentist who recently developed some kind of tremor. He can't practice anymore. So most dentists, when they start a practice, they would buy what's called a business overhead expense policy that covers the practice. And then they would have an individual disability policy that covers their income. So he's getting a monthly check from the insurance company for like $40,000 that goes to the practice. And that's covering his staff payroll and all that stuff. And then he's still getting his personal disability that pays him. He had ONA, so he's never going to recover. So he's going to be paid all the way to age 65. And he didn't have an accident. He just had some sort of a neurological issue or whatever the cause is. I don't know, but it's some kind of tremor. I'd skipped that class in med school. I don't know what.
Pradeep, I have a follow-up question. One of the things that you mentioned is if you go through an independent broker and you have this disability insurance policy that guarantees a certain monthly payout if you met the eligibility criteria for disability, that if you cannot exceed that initial benefit amount, I think you highlighted $7,500, if you also have long-term disability insurance through your employer. And many providers are offered long-term disability insurance as a benefit that we sometimes do not have to pay for through our employer. Sometimes there is a required amount that we have to subsidize for that benefit. Can you walk us through if it's necessary for us to have that additional benefit through our employer, and if we wanted to increase our disability benefits, say we had an increase in our income or we had side gigs or had private practice, what is the best mechanism for us to do that without forfeiting some of the benefits and I guess like the definition of disability that the independent broker or the independent policy could provide us?
So when you're ending training, the maximum you could get is 75. However, depending on where you're going to work, you could get more than 75. 75 is the minimum guarantee that you could get. Now, if you wanted more than 75, we would ask you to provide a copy of your job contract and to let us know what's being offered at your employer. For example, let's say you graduated and you were taking a job with Mount Sinai in New York. Mount Sinai, I think they only offered their attending physicians like $5,000 a month. And then you could buy into more of a benefit. On the flip side, someplace like Mass General, I don't know if that's changed recently, but up until last year, Mass General would give you the option to, you could either buy into their group plan or you get nothing for free. So you either buy the group plan, there's no free coverage. Most hospitals offer some level of free coverage as a part of your benefits package. And then some like Mass General, they would say, if you want in, you got to buy into it. If you don't want, you could choose not to and just buy all your coverage on a private policy.
All right, we're just going to pause here and just like clarify this. So as you can see, Pradeep is talking about how different jobs and different hospital systems have different levels of benefits. And so at one employer, they may offer you free long-term disability insurance. Other employers may make you pay for it. Some may offer you a large benefit. Some may offer you a smaller benefit. And so as physicians, I know we're moving around a lot, but if you're starting a new job, or even if you've been at your job for a while, you want to make sure that you look in to see, one, do I have access to some amount of free long-term disability insurance? And if the answer is yes, make sure you look in to see how much that benefit is on a monthly basis.
And this is one of the reasons why, having an independent policy is so important to me because I don't want to have to stay at any person's job if I don't have to. And your independent policy is completely portable. So you just want to make sure that you understand how much you're going to get, what the benefits are of your job. If you have an employer sponsor plan, if you have an independent plan, then those details may not be as important to you, but we encourage you to still look at it and understand what your opportunities are.
So there's a lot of moving parts to how much more you could add. The problem with most of the group plans that you get at the hospital or as part of a practice, it's only ONAC for 2 years or 24 months. So that's why a lot of times I tell people, try to maintain some level of coverage with a pure ONAC policy that you own, that you take with you. It doesn't matter if you change your job or what happens. You always have that, and you have a future insurability option rider on it. So you could always add more in the future if you decide to go independent, or let's say you're doing locums work. I see a lot of hospitalists, emergency medicine folks that are going the locums route. They typically don't have a group plan. So does that answer your question?
Yes, it does. Thank you.
Yeah, and I'm going to kind of piggyback on that. And I think what you were highlighting is something that's really important is like we're using disability insurance to protect or insure income in the event that we can't work. And it seems like it's important to understand that the reason why some people may not be able to work may not be because they're in a car accident. It may be because they develop a tremor out of nowhere in the example that you mentioned, or arthritis out of nowhere that they didn't expect, or got diagnosed with a chronic illness or a medical condition or whatever. So we may need disability insurance because some doctors may have to take it out. I think I heard a statistic about 1 in 7 doctors or 1 in 10 doctors end up using their disability insurance. And so I think it's really helpful to make sure that, we have that in case we need it. You were talking, Pradeep, about like how there is a limit to how much you can insure. And I think that limit may be around 60% of our income, which is why I think you were saying that, like, as an attending, especially if you're trying to get your own true ONOC or true non-occupation disability insurance, how one of the questions that you might ask your clients is like, okay, well, how much money do you make? And how much coverage is already provided at your job? Because insurance companies have a limit on how much they're going to allow you to insure. And so usually what's the case at most employers that I know at mine is that, yes, our employers do offer some protection, but there's a cap or there's a limit or there's a maximum on how much protection they're going to offer. And also there's some limitations in place about whether or not it's truly own occupation disability insurance or not. And so I think one of the things that you do is, people come to you, doctors come to you and say, hey, I want disability insurance or I want to increase my policy. And it seems like your next question is, okay, let's make sure that you're actually eligible for that increase. So let's see how much money you make. Let's see how much coverage is already offered at your job. And let's see how much more we can add through your own policy. And I think this really segues into the next question really nicely. And that when someone is looking for their own occupation disability insurance, what are some of the factors that they need to be aware of? I remember when you and I first met years ago, one of the things we were doing was like getting quotes. I was living in Florida at the time and I was about to move to Georgia. And then I had a friend that lived in California. And then I eventually went out to California and you were saying how the price differs depending on what state you're in. We just talked about how women pay more for disability insurance than men because they're more likely to be disabled due to things like pregnancy, how they factor in your health and like all of these things. So what are some things that we should keep in mind as people are looking to maybe get their own individual insurance policy?
So the state differences, the main one is California. Whenever California's pricing is about, and these numbers are average, but 20 to 25% more than other states. And then if you factor on top of that, if you're a female moving to California, you want to make sure you buy your policy before you get there. Now, there are also some companies, if you bought a policy, let's say you bought a policy in Massachusetts, then you move to California, your Massachusetts rates are locked in. That's not a problem. But then there are other companies where the time of doing an increase on your policy, it's the state you're living in at that time. That's how they calculate the costs. So, for example, I'm not going to name any names, but if you move from Mass to California, there's one company that would charge you California rates on the increase. The original that you bought in Massachusetts, that price is locked in, and you would only get that talking to an independent broker. So I generally coach people up on those types of things because I feel like it's the little things that people don't think about that could come back to bite them later. But in terms of, things to look at, I think obviously price goes up when you change age. So let me touch on this quickly for the resident crowd. If you're graduating on June 30th, there are some brokers out there that will send, I don't know where they get your emails from. I don't do reach out marketing to residents, but I know residents get a ton of emails about disability. There are some group brokers who would say to you, if you don't buy your policy by June 30th of the year when you're finishing, you're going to not get the 20% discount. That's a lie. let me just state that Guardian right now, this could change, but as of today, Guardian, Principal, Standard, and Emeritus, they will still give you that residency discount up until December 31st of the year when you finish training. It's not June 30th. And then Mass Mutual, I think their cutoff is September 30th. So you're still eligible for the discount.
Wanted to do a quick segue here just to explain what Pradeep is talking about when he's referring to discounts. If you are a resident or a fellow at an academic center, they may have a discount available while you are still in training, but that discount goes away usually about 3 to 6 months after you finish your training. And that's what Pradeep is referring to here. So if you just finished your training, you may want to look into long-term disability insurance because you may be able to get it at a cheaper price here. And remember, certain institutions, certain states are able to offer discounts for certain reasons. You want to make sure, again, that you're going to an independent insurance agent who is able to offer you those different discounts.
And you all know that I love a discount. So please ask, because some brokers may not be as forthcoming with that information. So always ask for the discount.
I try to tell Res because a lot of times, like last week was brutal. I'm not complaining, but last week, everyone who's ending panicking because they haven't done it yet. And they're afraid they're not going to get the discount. So usually the last week in June, we spend most of our time just talking people off the ledge in terms of, you don't need to hurry up and buy a policy. I mean, now, if you delay and you got disabled, don't call me. I can't help you at that point. So it's important to buy it, but don't buy it under some pressure that you're thinking, okay, if I don't do this by June 30th, I'm not going to get the discount. The discount's going to be there with most companies for at least 6 months following your training. Now, if you have a birthday coming up, that's another thing to be aware of because the price will change with each age. Yeah, you don't need to rush and buy it by June 30th, but if your birthday is in July, then maybe you should. So those are some of the issues to look at. The other thing too is the discounts. So it's important that you get some level of coverage when you graduate. A lot of times, and I've been seeing this a lot, where there's some pending physicians who never bought a policy. And now they're approaching like 42, 43, and they're thinking, oh, I need to have some level of coverage. Unfortunately, with most of the companies, you no longer have access to that residency discount. That ship has sailed. Depending on which hospital you're working for, we have discounts at pretty much every hospital with some companies like Emeritus and Principal. Mass Mutual is more selective. Guardian, not so much for attending physicians. So what we'll do, and that's the other reason in terms of reaching out to an independent broker, we'll be able to figure that out for you. And if we can't offer you a discount, but someone else has an exclusive discount, we would send you to that person. We have a list of who's got what, who doesn't have which discount. So I would tell the client, you need to reach out to this person. They're going to be your person going forward. I can't help you, but this makes the most sense for you. And we see that a lot with GSI programs. I think we might touch on GSI later.
That's fantastic, Pradeep. You are a wealth of knowledge. And if you all are still listening, I want you to open up your ears to something that Pradeep mentioned, is that the discount is still available to you. That's one of the things, at least for me, I always feel this time pressure. And we're telling you that this is an important thing that you should do because you want to protect your family, you want to protect your income and yourself. That if you have not already done this, don't keep kicking that can down the road. Call Pradeep, or if you want another insurance agent, but we recommend Pradeep, and get some disability insurance today because that discount is still available for you and you want to lock in that price. Now, thinking about disability insurance, and you mentioned GSI, and I would love for you to maybe tell us a little bit more about GSI so we don't just leave the people hanging. But one of the things that we're always a little uneasy about to qualify for disability insurance is the health questionnaire. And depending on when you get this, I don't know if there's like an exam for disability insurance. I did this years ago, so I can't remember all of the details. And we just feel like they're nosy. And sometimes it seems like if we're denied, then it deems that we're too risky. Is there any way to avoid these questionings, avoid the exams? Like, what is the best practice when we're positioning ourselves to get disability insurance?
So GSI is basically guaranteed standard issue. And that means if you are part of a random residency GME program and they have a GSI in place, you have access to it. So, for example, Mass General, they have one with the Standard, Tufts has one with Guardian. It varies depending on who has what relationship. But essentially, what it is, it allows you to buy anywhere from, and it varies by company, but you could buy anywhere from 1,000 to 5,000 when you're in residency. When you exit residency and you're going into attending, you could bump it up to 7,500 or 15,000. And there's zero medical questions on the applications. They don't do any background checks. However, there's one major knockout question, and it's basically going to ask you, have you previously been declined by another carrier for disability insurance? And if you say yes, you're not eligible for the GSI. So while the GSI is guaranteed standard issue, it's not guaranteed standard issue if you've been previously declined. So what I've been telling clients is, if you are absolutely positive you have nothing medically, then it's okay to apply. If you have stuff in your medical history that you're not disclosing to me, and people sometimes choose not to disclose certain things, and we find out after the fact and you're declined, I can't help you. So if you have any type of medical issue, you want to look first for a GSI program and at least lock that in, because you have the ability to bump that up all the way to 15,000 per month and no medical questions will be asked. It's changing a little bit where some of them are asking few basic questions, but nothing in depth. But for the most part, I think you want to have GSI as an option before.
That was really good. So what I hear you saying is that you want to find an independent broker who you can be honest with to make some of these decisions, because sometimes, at least for me, and I can probably speak for majority of physicians, we don't understand all of the nuances of the policy, but this is why it's really important to get some expert advice. And we want to be honest with you about what are some of the medical conditions so that you can make a recommendation whether we should apply with another company, or if our institution has an established connection with the guaranteed standard issue policy, then that might be the best option for us to use the GSI policy. But if we have a clean bill of health, then maybe we can apply for another company and do this shopping thing. But if we've been denied from another company, then we can't get GSI insurance. So I think that this is really, really important to clarify, because I know some people do have medical conditions and they still want to have the option for disability insurance.
Yeah, I would piggyback on that. And I would say, I think that that's the most important thing. If you don't take away anything from this conversation, I think one of the things that you should take away is that you need to go to someone that you can trust, right? Because an ideal independent insurance agent is going to, number one, be able to talk to you about what options are available to you. They're going to be able to get you quotes from different companies. They can also, if they're good, genuine person, let you know if there is a GSI policy, if there's a guaranteed standard issue policy available to you that will allow you to get your own disability insurance policy without needing to answer all the medical questions, right? So you want someone that you can trust who's going to tell you about those things. You want someone you can trust who can let you know if there are discounts available to you. You want someone you can trust who can ask you some of these preliminary health questions and will let you know, hey, you have a good chance of getting approved or you might get denied, and here's another route that we can go under. You want a good insurance agent who can let you know, hey, based on how much coverage you already have at your job, this is how much you're eligible for. Because there are all of these different nuances. And if you don't live and breathe disability insurance, as we know that you do, Pradeep, then you may miss something, right? Maybe you're overpaying on your policy. Maybe you don't have a sufficient policy. Maybe your policy doesn't have the amount of benefit that you need it to have. And so, I realize that this can be complicated. I realize that this can be nuanced. I realize that this policy can be expensive and that the price may vary based on a lot of different factors. But I just want people to walk away from this saying, okay, do I already have disability insurance? If I have it, how much is my benefit? And is that benefit enough? Right? And if it's not enough, if you don't already have it, or if you need to upgrade the policy, then I want to let people know that, like, hey, clearly we know somebody who knows a lot about disability insurance and could probably talk all day about all of the nuances. And I just wanted to give them a trusted source that they could go to get that information. So Pradeep, thanks again for coming in and popping in on our podcast. How can people reach out to you? Like, if they are listening to this and they're like, oh crap, I don't know if I have a good policy, or oh crap, I don't know if I have enough. How can they reach you to sort of fix this issue?
Probably just go to our website, pkainsurance.com. Probably the best way to go. There's a request a quote button or contact us button. Just send an inquiry there. And we do policy reviews for people all the time. So if you need us to look over your current coverage, we'll tell you if it's adequate. And just to touch on two things, and these came up last week and they've come up previously in the past with clients. A lot of times I get a lot of questions from young female physicians that are in a relationship but not married. And they're like, well, my partner, do we both need a policy? My take on it is I'm going to advise you as I would be advising my sister. I don't need to be negative on love, but things happen. A diamond might be forever, but I don't know about some of the other stuff. But I think you need to think worst case scenario. And most people are not thinking through worst case scenario this time, but I think you need to figure out, okay, worst case scenario, you're no longer married. What happens? So I generally tell them, try to have at least a small benefit that you could increase later. Just lock it in. Because if you're not combining assets, or your plan is to combine assets, but then you're not together anymore, what happens to you? Because you're going to be working. If you were no longer of the same health and you didn't lock in your residency discount, you're going to be paying a lot more for this in the future. So a lot of times people are like, well, my husband will take care of it, or my partner, he makes a lot of money. I'm like, okay, I hope he supports you forever, but I can't guarantee that. So it's something you need to think about. And that's why it's good to have your own coverage. And again, you don't have to go crazy and get like the maximum level, but get some level of benefit. So that's something I see a lot with especially young women that are reaching out. And the other point that comes up is, do I really need to maximize my benefit? And the answer is no. So a lot of times, I have clients who could qualify for $15,000 per month, but if your lifestyle would be sustainable on $8,000 per month, then don't waste your money. Just buy $8,000. So you need to figure out, with all the other bills you have, how much money do I really need in a worst case scenario to keep a roof over my head? And if that number is 8,000, then buy 8,000. You don't have to buy 15 because you're eligible. So yeah, those are two things that popped up last week multiple times. So I wanted to share that.
Well, Pradeep, I want to say thank you for joining us. I have definitely learned some things, and I'm in the process of helping my husband increase his benefits. So a lot of this is just reigning true and bringing a lot of it to the forefront. And I just want to say thank you for all that you're doing and being honest. Oftentimes we feel like we are at insurance broker or other financial professionals' disposal and that we don't actually know what's going on. So it's nice to have a trusted source who can help us to think through these things.
Good to be here. Thanks for having me.
All right. So, Brittne, one of the things that I wanted to really clarify is being transparent about how much you and I each pay for this, because we both have our own individual long-term disability insurance policies. And I don't know about you, but I'm never happy to pay the premium each month that I'm paying for my policy. But I'm actually not paying as much as other people. Like when I graduated from medical school, before I started residency, I got a benefit that would pay me out $4,000 per month should I get disabled, and I pay $100 a month for that policy. So every month, Mass Mutual takes out $100. Actually, it's $106. And if I were to get disabled, then I would get paid $4,000 per month. And some people may wonder, okay, Lisha, why did you only make a benefit of $4,000? Well, at the time I was a resident, and I said, well, my job will already give me, $4,000 or $5,000 per month. And so me getting an additional $4,000 on top of that would be sufficient. Because remember, with long-term disability insurance, you want to make sure that your benefit is enough to cover your monthly expenses. And I figured that if I got disabled, $8,000 a month would be sufficient for me. I would get $4,000 from my job as a resident and $4,000 from my own individual policy. Now that I'm an attending, my job will actually pay out up to $12,000 per month. So when I combine my job's $12,000 per month plus my own individual policy of $4,000 per month, that means if I were to get disabled, I would get $16,000 per month. The benefit from my job would be taxed. The benefit from my own policy would not be. But I think, I think I could live on around $16,000 a month. What about you, Brittne?
Yeah, I could live on $16,000. I might have to sell a few things, but
Okay,
yeah.
Brittne, you got that high cost of living.
My
Okay,
gosh.
all
I
right.
mean, I live in Boston. So anywho, yeah. So Lisha, I pay about $2,400 a year, which breaks down to $200 per month for a benefit of $7,500 per month. And then I also have that long-term disability insurance through my employer that would pay out about 60% of my salary. So,
Hold
I
on, I have a
think,
question for you.
yes.
Because you're married, did you ever think like you don't need disability insurance because you're married? And if you were to get disabled, then you all could maybe live on your husband's income, or maybe that he didn't need disability insurance because if he got disabled, he could live on your income? Like, what factored into the decision for you each to get your own policies?
That's a great question. Actually, I just presented with the residents, and there was a woman who's a resident who asked that specific question. And for me, it was really important that we each had our own disability insurance policies because you never know what life is going to throw at you. And disability insurance is going to be more affordable when you start the policy when you're younger. I have two children, and I know that women are more likely to use disability insurance because of pregnancy and also mental health disorders. And so I just did not want to risk my ability to get an independent policy if something, God forbid, were to happen after pregnancy. And I think really protecting your assets is going to be the most important thing that you can do. And so for my husband, if he were to become disabled, yes, we could potentially downsize and live off of one income, but it would require an adjustment. I want to be able to support us and protect the lifestyle that we currently have as much as possible. And that requires two incomes. Also, as someone is disabled, right, there's going to be an additional burden for the other partner, not only in generating income, but other household tasks, perhaps. So I didn't want to add on some of the psychological burden that my partner might also have to carry in addition to that income burden. So I think it's just like balancing out the two, understanding where you are. Now, we may not always need disability insurance for both of us once we build our assets to a point at which the dividend income will equal the payout from the disability insurance, and we have reduced some of our expenses. But now with two homes and kids and daycare at a young age, it's really important that we are able to protect ourselves.
Yeah. So I think what I'm hearing you say is like, hey, Alicia, maybe we could live on one income, but right now, all of our financial goals and our priorities depend on two incomes. And so even if your husband were to get disabled or you were to get disabled, having to live only on that one income when right now y'all are living on two would be a big adjustment. And so you got disability insurance for that protection of saying, no matter what happens to me or what happens to your husband, y'all are going to be okay. Your family's going to be okay. Your kids are going to be okay. You're going to be able to pay all of your bills and all of that. And so I think that's a lesson that our audience can learn because I think there may be people listening to this who are physicians or who are married to other high income earners who may be wondering, do I still need this? And I think our answer is unless you are financially independent, unless you are extremely wealthy to the point where if you stopped working, you could still maintain your standard of living. Unless you're at that point, you really do need long-term disability insurance. And so I think that that was important to highlight there. And hopefully our audience, if you don't currently have long-term disability insurance, that you look into getting it. And remember, Brittany and I are not insurance agents, right? But we think that that is so important to protect your income and to make sure that you're always going to have enough money coming into your household to meet all of your financial needs.
Definitely. For me, I think disability insurance is kind of like your helmet. I tell my kids when they want to ride their bikes and their scooters without their helmet to put them on because they're protecting their biggest asset, which is your brain. And right now, if you're not financially independent, your biggest asset is your ability to generate income. So you want to make sure that you're putting on your helmet, protecting your ability to generate income each and every moment.
And now for our fun money segment. Okay, Brittany, what's something fun that you are doing with money?
I am going to get my nails done for this conference, and I'm going to the conference. I'll meet up with a friend, go out to dinner. So, I haven't spent the money yet, but that is what I will be doing with my money soon. And hopefully we'll have a lot of fun spending money in that way.
I'm happy for you. I'm happy for you. I am going to the Olympics, which is ironic because I started this podcast about saying how I'm traveling too much. But the Olympics are only once every 4 years. And as a sports doc, I'm pretty confident I'll have the opportunity to work the Olympics, especially in 2028 when it's in LA. This is me speaking that into existence. But I really wanted to go as a fan. One of the things I've learned as a sports doc is that it's very different covering a game as a fan versus covering it as a sports doc. Both have value and both bring me joy, but I also really enjoy going as a fan, I can go with other people. I can really enjoy the experience. I can show up right when the, event starts instead of having to be there much earlier. I can leave when the event ends instead of having to stay much later. I can actually enjoy it instead of having to like be on beck and call all the time. And so I really enjoy going to sporting events as a fan. And like, I have always wanted to go to the Olympics. It has been one of those bucket list experiences for me. I didn't know if it was possible. Like I thought it was going to cost too much or that the tickets would be sold out. And just like, I think saying my desires out loud, especially around friends, has like changed my mind frame from like, can I do this to how can I do this? And then when I went into the problem solving mode and like the more I talked about it, the more my friends were like, wait, we want to go too. Don't leave us. And, we started looking at flight prices and they were pretty affordable. I was able to find a good flight on points and like looked at hotels and were able to find one and like looked at tickets and able to get them affordably. And so like I am very excited and very much looking forward to this because this started off as an idea in my head that I didn't know was possible. And now it is something that I am like making happen with 2 incredible, amazing doctors that I trained with. And so I'm like very excited for this. So my fun money is like spending money going to Paris for the Olympics, and I will rest a lot before I go.
Well, I'm really excited for you. We watch a lot of replays because I almost don't watch anything live nowadays at the Olympics. And Brooke really loves sport. She loves track, and we always watch track and running events. And I also really just want to reiterate how you spoke something to existence and then you anchored yourself in how. Not in like, is this possible? But how can I make this possible? And I think when we're talking about our finances, when we're talking about creating a life that we desire, a life that is going to bring us more fulfillment and joy, focusing on the how can I make this happen will set the intention and have action that allow us to accomplish that. So kudos to you for that life lesson. And again, as always, I'm living vicariously through you, Lisha. I wish I could have like a little oxygen tank or something. You could put me in your suitcase, but I'll let you have the fun and I'll just live through you.
Sounds good. All right. Thanks for tuning in. We can't wait to come back to you next week.
Hello, and thank you for listening to our podcast. And because of that, we have something for you, our Wealthy Mind Starter Kit.
Have you ever thought to yourself, I wish I could be better with money? Do you want to start investing and saving for retirement, but keep delaying because you don't know where to start? Our Wealthy Mind Starter Kit is here to help.
This guide will teach you what you didn't learn in your training so you can stop being confused about money and start taking what we call wealthy-minded action.
We'll help you become a master of your finances and simplify investing so you can get started today. Take control of your financial future by downloading your free copy of the Wealthy Mind Starter Kit now and start building the wealth you deserve.
Hello, everybody. It's me, Brooke. I'm recording a little disclaimer for my mommy, Dr. Brittne Halford, and her friend, Dr. Lisha Taylor. Just so you know, they're not financial advisors, tax professionals, lawyers, or financial planners. Everything you hear is for education and entertainment. It's not strict financial advice, So use your best judgment, chat with a tax professional, and all those other people that you need to talk to. Thanks for tuning in today. Keep cruising on your journey to wealth and wellness. Bye-bye.
One of the most important things you can do is ensure you have long-term disability insurance. Long-term disability insurance secures your income if the unexpected happens and you are unable to work due to medical illness, chronic conditions, or an accident.
Unfortunately, all insurance agents aren't created equal. Some of them are so focused on making a sale that they fail to reveal certain necessary information, tell you about discounts available, or clearly explain the process. Pradeep Audho and his team at PKA Insurance Group are different. They have a reputation of putting people over profits and always doing what's best.
If you need life insurance or disability insurance, reach out to Pradeep and his team today. They will help you get the insurance you need with the service you deserve.